For that, now let's turn our attention to the primary market. The IPO of Five-Star Business Finance is open for subscription. The offer is a complete offer for sale of more than 1,900 crore rupees. My colleague Abhishek is here to get us up to speed with all the details. Abhishek.
Well, Rima, as you mentioned, the IPO is entirely offer for sale from the existing shareholders. So the issue period is between 9th of November to 11th of November. The total fundraise is of about 1,960 crores. The price band is about 450 to 474 per share. So the valuation based on Q1 FY23 book value works out to around 3.6 times, the price to book value multiple, which is slightly on the higher side when you compare to other listed peers. So there has been positives from the IPO, given the fact that this company has net interest margin of more than 10%. They cater to under-penetrated segment in India, so the scope for growing ahead is also visible. There are very highly capitalized at around 70%, so there won't be frequent equity dilutions for fundraising over the next, let's say, even 5 years or 10 years. The risk over here is that the return on equity can remain capped, given the fact that leveraging the balance sheet will take time. Risk weight to AUM ratio, now that's been increasing, so the risk that they are taking for incremental loan growth is actually increasing. Valuations are slightly expensive, so there are low chances of re-rating for this candidate, and any RBI intervention that can actually impact their business will be taken negatively. Back to you.
All right, Abhishek, thanks a lot for explaining that to us and taking us through the issue details as well of Five-Star Finance. But to understand more about the business, the plans going forward, and what the numbers could look like, we are joined by Lakshmipathy Deenadayalan, who is promoter, chairman and managing director of the company. Mr. Deenadayalan, good morning and thanks a lot for joining us. This is Pavitra. I'm going to get to all of the individual numbers in just a bit, but I have to start by asking you about the valuations. At 3.5 times price to book, this is an expensive issue, and considering the fact that your ROE is looking the way it is, and the fact that, like Abhishek was also just mentioning, it could remain quite capped, could you take us through why you think this valuation works?
Good morning all. Thank you for having us in CNBC-TV18. Before talking on the valuation, let me take you through how uniquely Five-Star is positioned in the underserved market. We all know India is the land of millions shopkeepers and millions of self-employeds. In these shopkeepers of self-employeds, the first port of credit is being today served by the money lenders. That is where Five-Star goes and disturbs the money lender market, which is very, very huge. There is a study which says 2 out of every 3 people whom I mentioned, their credit is being met by informal lenders like money lenders, friends and families. That is where Five-Star goes and taps the market. We have given the study in our DRHP, which talks about the market opportunity of close to 22 trillion in our country. I think that is where Five-Star is now heading towards. So keeping that in mind, and second point, we have been doing this for last 20 years. We have not started this journey a few years back. We have been doing it from 2002. By the way, this is my 20th year in Five-Star. So when I joined Five-Star, we moved from lending to vehicles towards this segment, which was considered most riskiest in those times. So Five-Star took a chance, underwritten the risk well. In last 20 years, if you see our data, both in growth, will come in profitability and quality. Last year, we made close to 450 crores of PAT. And first quarter of this financial year, we made close to 140 crores of PAT, with one of the best asset quality when you compare with our peers.
So,
keeping the opportunity.
Mr. Deenadayalan, sure, we got that. We know the historic data, but I guess, what the big question now is there's so much competition in this space, especially from some of the more well-known or larger brands, if you'd want to call it, whether it's the Shriram Group, you have, AU Small Finance Bank, Avas Financers, a whole load of people in this space now. So this growth that you've seen, right, your AUM's currently at about 5,100 crores. Over the last 4 years, you've seen about a growth of 50% compounded. Is it something that you can sustain, or do you think competition could keep a lid on the growth in the future?
Definitely, we can sustain whatever we have whatever we have did in past. I can't give a forward-looking statement today. But what differentiates us with the names, what you said is very clearly two factors. One is the ticket size. Our operating ticket size is between 3 to 5 lakhs. Our sweet spot is between 1 to 10 lakh. The names what you mentioned, their ticket size at least would have been 2x or 3x of the ticket size what we cater to. That is the specialization I was trying to say in earlier question. Thus, that creates more value as Five-Star gets into the IPO market, because we are the niche players in this segment. Just to brief you what Sundaram Finance did in 1960s and 70s, what Shriram did in 1990s, we have been doing it for last 15 years. So that is the niche and the differentiated approach what we are taking to the mass segment.
So fine. So your right comparison may not be an AU Small Finance or the Shriram Group, where the ticket size is a lot larger. But now with the advent of technology, sir, we've seen so many startups who are trying to cater to the underpenetrated segment by offering loans. And these startups have been mushrooming, you know, for like every alternate month, you've got a new one who's trying to get into this whole fintech, payments, loans segment that you are operating in the last 20 years. So do you not think that, you know, going ahead, the competition is only going to increase, and these companies are using a lot of technology and they may be able to offer the same loans perhaps at a cheaper rate? So the short point is, say over the next 5 years, if you could give us a sense, do you think NIMs can sustain at these levels, or do you think with technology it's going to start coming down? And even the investment plans as you expand beyond south of India?
It's a right question. I think people have to understand very clearly how we operate and where we operate. So the so-called tech names, what you said, they are operating in tier 1 and tier 2. Our main focus will be in tier 3 to tier 6 market. That's our footprints are. Close to 95% of our branches are being predominantly in tier 4, tier 5, tier 6, where the technology penetration is not in a big way, like what you see in tier 1 and tier 2. This is the first differentiation. Second one is the technology, the fintech guys, they operate in a different space. They provide you a working capital loan close to 50,000 rupees or less than 1 lakh for a shorter tenure of say 3 months to 6 months. Whereas in Five-Star, we provide for them for a business setup, right? Business setup costs somewhere around 3 to 5 lakhs, or improvement in business setup costs around 3 to 5 lakhs. So our ticket size is 3 to 5 lakhs, and we give a tenure close to 5 years to 7 years. So I think that's the differentiation, both where we present and how does our model gets differentiated between this technology. Third is, I think everyone agrees, the lending is, the art of lending is not growing your asset, keeping your quality and profitability on the right path. I think Five-Star has set up a very clear collections setup for last so many years that has given a best asset quality and profitability out of the assets what we create. I think these are the big differentiation I see. I don't see any competition building in tier 4, tier 5, tier 6 city in near future.
And any plans to expand beyond south of India, and would it require significant investments on your part which could pressure the business?
No, our business model capex is very light. To open a branch, we may need less than 10 lakhs as a cost that will incur. As of today, Five-Star's branch presence is close to 95% in South India. We want to be a South Indian player for a short term. But having said that, we are putting our branches in some central and northern states like Maharashtra, Madhya Pradesh, and Uttar Pradesh. If you want to say a long-term view, we want to be present around 10 to 15% in non-South, but predominantly we want to be in the South-based lending, where the market is huge, the collections are stable, the income levels of the people are going.
All right, we will leave it at that. Thanks a lot for joining in and taking us through your business. That is the Five-Star Business Finance. The IPO opens today. Let's slip into a short break. Up next, we'll discuss the market fundamentals with Swati Kulkarni of UTI Mutual Fund. Stay tuned.
This